So guys, Tesla posts earnings tomorrow, and it got me to thinking whether I would buy their stock. Now, as you guys know, this channel is all about implementing Theta Gang, so as of right now, I could only buy one Tesla stock, and it would kind of throw the whole Theta thing out the window. So it's a pretty hard question to ask, but I went through and did a lot of fundamental analysis to try to decide, where I thought Tesla was relative to other manufacturers. And so for this video, I'm going to try to answer that for you, what I would think just relative to what they've done. Now, I'm just pointing out what Ford did. They just missed estimates. So Tesla is likely to fall tomorrow and maybe fall hard after they post. We all know they're super volatile, so anything could happen. From this point forward, though, the entire video is going to be dedicated to the things I'm thinking about when I'm thinking about investing in Tesla. So I think the things that people connect with Tesla is innovation, and I think that's mostly true. But first I want to talk about them as an electric car maker in general. They benefit from a lot of free marketing, and they even discuss that in their annual report. I'll show you guys that in a second, but here I'm just gone through and compared them to a lot of other electric cars. And as you can see, the Model Y, their newest model, doesn't fare terribly well against other cars. Now, it definitely beats them. You can see right here. The Tesla Model Y is the highest. The Mustang Mach-E obviously had that massive hype when it was announced. Porsche Taycan as well. And the rest of the year, the Tesla pretty much beat everything else, except for at the beginning of the year, where the Audi e-tron held a slight lead. 5-year version of that basically says the same thing. Now you can see how the Model Y did when it was announced. Here's another graph that shows similar data. Now I'm just comparing other cars. Mustang Mach-E is the same. Now it's the Model X. We've got Fisker here, which will compete mostly with the Roadster when that finally comes out, and the Taycan. And then here are some BMW models. And as you can see here, really the only thing of note is the i3. Model X actually does pretty well in general, especially better than the Model Y. But you can see this free marketing that Tesla gets really is potentially fleeting. And as I was putting all this together, I did remember there was a little thing called the Cybertruck. That was when I started reading Tesla's annual report, and I was like, yeah, I probably should compare those two. And yeah, the Cybertruck dominated the Mach-E when it came out. Now, it is highly debatable whether this is good for Tesla or not. It's also debatable whether the Mach-E was good for Ford or not, but just this is here for reference. Now, because these search terms are kind of difficult, Tesla Cybertruck I think is more attainable than Ford Mustang Mach-E. I also compared Cybertruck and Mustang. Obviously, this is a little tough comparison because the Mustang has other interest besides just this big peak. But as you can see, interest almost doubled at that time period for the Mustang, whereas the Cybertruck reached about half what the Mustang does. But the reason I went through all of that is because I wanted to show you that Tesla is a little bit banking on that free marketing. They talk about it here, but basically they don't have to spend on marketing right now because the media and people are willing to do it for them for free. Other electric cars can potentially break in, and if that happens long term, Tesla's going to have to switch to actually advertising their own vehicles. And that's not necessarily a bad thing, but it is something to think about because this is a big benefit to them. And you might also be inclined to say, well, that's all in good, but Tesla is so far ahead. They produce so many more electric vehicles. That's just not something to worry about. And I would then show you this. This year, they were trying to produce about 400,000 vehicles with the opening of some new plants, and they think they can get that all the way up to 500,000. That's pretty good. You can see this is their annual numbers up here. They 367,000 deliveries and 365,000 productions. So they're only increasing productions by about 40,000, but that is still 10%. That's pretty good, and that's just for this year. Now, some of that is to compete in China's market, which I don't know if that's that great for them, but I'm talking about that later. This is BMW's annual report, and let me get you a page number for this. Page 68, they talk about their electrified cars that are being produced. Now, note this does say electrified, which includes hybrid engines. So when you look at the BMW i models, that's the i3, i3S, and the i8. I mean, car enthusiasts for sure know about the i8, which is a hybrid, pretty controversial. I can direct you to a Doug video on that. So they're not all electric cars. The i8 is not this figure, though. This figure is probably 90% or more, probably as much as 95% i3 models. And the base i3 is an all-electric with fairly limited range, but when we looked at the trends earlier, it does pretty well in the results. And the i3S is an upgrade to help increase the range. BMW E, I think, is a European model. I couldn't find much information because BMW would only connect me to the US sales site, and I didn't have time to go through this entire report. So look into that on your own. Mini Electric is a completely electric car, and they produce 16,000, and at a total of 146,000. That's half of what Tesla does, and that's just BMW just doing their thing. So Tesla's definitely getting competition in the electric market. Here I've jumped over to Volkswagen's report. It's actually not as useful for electric cars because they don't have a direct figure. They go company by company, talk about each individual model. Tesla doesn't give you this breakdown, so it's hard to compare. But they do say the Model Y and Model 3 are their most important cars. But here you can see Volkswagen's only contribution for electric cars in the actual Volkswagen brand. Now, the Volkswagen company represents a lot more. Audi's an important player that we'll talk about later. And I think across the board, they have about 2% for electric vehicles, which for VW is a lot of cars. They had revenues of $252 billion last year. And if electric vehicles account for even 1% of that, that's still $2.5 billion, which is a little bit more than half of what Tesla does as an entire company, including the solar panels. So please, if you're thinking about investing in Tesla, don't let it be because they are the only electric car company there is, because there's competition and it's coming fast. Now, I do think much more legitimately you can talk about their Autopilot features. But here they talk about what their self-driving entails. And as it currently stands, it's basically a better branded version of what all the auto manufacturers have. I think the only thing that most manufacturers don't have is auto steering, although I'm unsure because I haven't been keeping up with Doug as well as I should be. But traffic-aware cruise control, that's just called adaptive cruise control for normal auto companies. Automated lane changing isn't necessarily something that's implemented, but if you think about it, auto lane changing isn't that much from lane keep assist and blind spot monitoring. Those two things combined, you can create this. Automated parking, we've definitely been seeing. Driver warning systems, blind spot monitoring, front-end collision, all sorts of those things. Those cross cameras on the minivan, those are all driver warning systems. Smart Summon definitely is a unique feature for Tesla. So all in all, this is a decent system. But the most important thing here, other than the over-the-air updates, is this line right here. And this is where I think Tesla's main advantage is with self-driving. It's the fact that all of their cars are implemented with the same driving system, and that's helping them train and improve the neural network. And this is very important because for those of you who don't know neural networks, they look like this. This is your series of inputs. For Tesla, this would be like pixels. Here's a series of weights, another series of weights, and then in between these would be filters that are being applied. But the way you use these is you give it sample data, it gives you outputs, so this could be like change lane, stop, whatever, or stop sign, stop light, yield sign, whatever you want it to be. But to do this, you have to have labeled versions of this, so you put in your inputs, you know what the output should be, and based on the results here, you then do something called backpropagation, which trains the network. And because they have so many cars out on the road, they are getting so much data. And in its current form, the automated driving requires user input. So if you want to change lanes, scratch that. If the car wants to change lanes, you have to confirm for the car that that's okay. And then the new stoplight stop sign that they just released, same deal. And what this is good for Tesla is because the user inputs are there, you're getting labeled data. So if the car says, I want to do this, and the user says, go ahead, You just got a positive. The car just said that what it did was good. If the user overrides, that's when they know that there was an issue. So they're getting all this labeled data that is going to make the back propagation possible. Now, the network I showed you guys earlier was a pretty simple one, but that's the big advantage for Tesla. It's not so much where they are now with the features, but it's the advantage that this gives them. Okay? One cautionary note, though, is this might not matter. We know Google's developing self-driving cars. We know Uber's developing self-driving cars. And we know all the car manufacturers are. Ford and Volkswagen have a partnership. I'm not sure how that's going to work out. We can talk more about Volkswagen another day because I read their entire annual report, but they're doing a lot with software right now. But I guess I will talk about them a little because the Audi A8 was supposed to be a level 3 autonomous vehicle on the road this year. And for those of you who don't know the levels of autonomy, what that means is it's the first car that can drive around without user input. So these lane changes and all of that the Tesla requires their user to basically confirm, the Audi was not going to do that. It was just going to let the car do it itself. Now, there were some restrictions on there that were pretty intense. You needed a divided road under 37 miles an hour, and those were the conditions for it to occur. And it was not going to be in the United States, only Europe. But importantly, Volkswagen scrapped it. Their cars are coming off the manufacturing lines with all the equipment to do this, so potentially they could update later, but they were not willing to release it given the current legislation in Europe. And this will affect Tesla too, because right now in the States, about 20 states have basically passed legislation that says autonomous cars are okay for testing. That leaves some ambiguity, especially when Tesla tries to progress or somebody else tries to progress to a non-testing version. There's going to be a lot to do. So say legislation just doesn't pass that makes that feasible. Well, that's a problem. Tesla's not going to get this grand boost from going to a level 3, 4, or 5, which is completely autonomous. Don't have your eyes on the road. Do whatever you want. They'll never get there if legislation doesn't allow them to. And while I think that eventually that will be allowed, I would anticipate some roadblocks along the way. And some potentially big deals is legislation that came out of Florida. And I think some of it is a little ambiguous, but for sure, what Google's doing is a little risky in Florida, because Google's intention with their self-driving system is for you to basically be able to get these implemented on a car you have today. So you go out, buy the equipment, put it on your car, you've got a self-driving car. Pretty cool. In Florida, if that car goes out and gets in a crash, they can sue Google, not the person who owns the car, not the person who was in the car, Google. And obviously, if this gets extended to Tesla as well, that could be potentially risky for Tesla. They've already got some liability issues right now. They caution in this here that lithium-ion batteries are a little finicky and that they might not always be able to ensure that fuel cells are isolated from each other, which means fuel cells have the chance of spontaneously releasing energy, which causes smoke and fire, which could basically mean a car fire if these cells aren't isolated from one another. And Tesla cautions in this report that they might not always be able to ensure this, and they might be subject to recalls and litigation because of cars catching on fire. Now, we haven't seen this from Tesla so far. This is what was happening with Samsung a couple years ago. They had a lot of phone issues with batteries. It was scary times. You thought your phone could light on fire at any moment. So if this happens where maybe somebody does something crazy, get in a super high-speed collision, but then their Tesla bursts into flame because of their battery, you've got to imagine that's going to hurt Tesla a bit and electric cars for sure. But the same thing goes for the self-driving mode. Right now in Florida, if it's a car manufacturer who makes it, it doesn't look like they're liable. It's only if you are installing it aftermarket where you'd be liable. The person liable in the event it's an auto manufacturer would be the person who engaged the Autopilot system. So say it's a level 5 autonomous vehicle, you can just have it do whatever you want for it. and say you need something from your relatives, you go send your Tesla on the way, it goes in, it gets in a crash, kills someone, you are liable, not Tesla. That's current Florida law. But I would say that the litigation for the self-driving is probably the number one risk for Tesla right now. Another potential source of litigation is what's called galleries. This is page 12 of the annual report. I don't think this is in the risk section. That's later on. But this sentence really caught my eye because basically Tesla right now sells their cars directly to you. So there's no in-between dealer, and Tesla can make a little bit more money that way. And to be able to do that, most states require manufacturers to have a license and dealers to have a license. So they're licensed as a manufacturer pretty much everywhere, but not all states allow manufacturers to also be dealers. And as you can see with this sentence, in those states they've opened galleries that serve as an educational purpose where the title won't transfer. What this means is they're opening up stores that aren't stores that show off the cars, but aren't actually where the transaction occurs. And in the risk sections, they expand on this to say, this might not fly forever, so just be wary. I think it's pretty likely that there are going to be some major issues with other auto manufacturers if this continues, and Tesla's actually posing an issue where the other manufacturers are going to try to get these laws enforced a little bit more strictly. And that would definitely hurt Tesla's bottom line. But these are really the main things I'm seeing with Tesla. I'm going to jump into the next section, which is China. So here's a list of Tesla properties. This gigafactory in Shanghai is basically so they can compete with the Chinese market. And I've been hearing that Teslas have been popping in China. They don't provide data in here, but I've been hearing it's been going quite well. But they note with this that this factory is to be able to compete at the same cost level as other cars, which isn't that great. We saw earlier that they're thinking they can get their production up to 500,000 cars a year, but the margins in China aren't nearly the same as what they are in the US. Like for reference, Volkswagen had about, I think it was 43 billion in revenue from China, 42 billion in revenue from the United States, but they sold 4.5 times as many cars in China than the United States. So even if Tesla starts selling more of their cars in China, they might not be making a lot more money. And I do want to correct myself, 44 billion is the figure in China, and I think US is 43. I know they're 1 billion off, but that's the deal. So yes, they're expanding into China. Yes, that's a huge market, but it's not exactly a more profitable market, or it's not necessarily guaranteed to be more profitable. We'll need to watch out for more information on that. So guys, that's almost all I wanted to talk about. Hopefully that was a good discussion, but I'm seeing a lot of risk with Tesla, and at their current evaluation, they're at 141 billion market cap. If we jump over to Volkswagen, they're at a $67 billion market cap. And Volkswagen had $252 billion in revenue last year. Tesla had $4 billion. For me, I think the Tesla numbers are super inflated. We can also compare with Ford, which is valued at $21 billion. I don't know that much about Ford, though, so I don't really want to make any statements about what this number is relative to VW or Tesla. But it seems right now Volkswagen is on stronger footing, despite still dealing with fallout from the diesel scandal. Yes, they still are. So if it's a question of how much does this number need to fall for me to get in, I think it needs to be under 100 billion before I would consider it. And mind you, this is before I'd really even consider it. And that's at $542. So that's my consideration. There are other things with Tesla I didn't touch on. I'd say they're making good headway with their solar, and they've got a lot to grow with the financing. I mean, Volkswagen did $252 billion in revenue, 40-something billion from the United States, 40-something billion from China, and $40 billion in financing. Tesla isn't near that level of financing, so they could grow a lot. But year over year, their financing activities did grow, but also fell in certain sectors. So I think that's something to watch, but that is how a lot of auto manufacturers make money. I think one of the big things is the auto taxis. that Elon has kind of hinted at recently, that does have the chance to be a good thing. But again, I just don't see it happening very quickly. And I think because of the volatility in Tesla's stock, there'll be chances for entry that aren't at this rich a valuation. So if Tesla misses earnings like Ford did, I could easily see them falling at least to 600. I'm not confident enough to trade an option. I mean, I could go to the May 1st options chain. We could look at this. I could just do a put spread right here. Now, I have all of tomorrow to consider this. But if I just buy this put, sell the next one for a potential max gain of 500, costing 290, that would be 210 right there. And all it has to do is fall $5 in share price. Let's say, if we're more confident, so they could fall easily 10% if they miss earnings. Tesla's just been crazy. If we bought this put and sold the next one, that's $1.38 to get $500 back. But for me, that's just too risky. I don't want to do it. I don't want to play their earnings because I'm certain if they show any signs of encouragement, they're going to go up and up and up. Now, I do think Elon's actions suggest they're going to be moving down here, and hopefully that means some lower entry points. But with that, guys, I'd love to hear your questions or your thoughts. Did I miss something? I don't think I did. I read through the entire annual report for Tesla, entire annual report for VW. I watched a lot of Tesla information. I looked into automation. I tried to do my best for you guys. So with that, tell me your thoughts, do some research, and, let's make some money.